Big Lots, the beloved discount retailer, faced a devastating blow in September 2024 when it filed for Chapter 11 bankruptcy. This news sent shockwaves through the retail industry and left many wondering about the fate of the company's thousands of employees. The once thriving chain had been grappling with declining sales and mounting financial losses for several quarters. In a bid to stay afloat, Big Lots had already shuttered 500 stores prior to the bankruptcy filing, a clear indication of the severity of its struggles. An initial glimmer of hope appeared when Nexus Capital Management expressed interest in acquiring the beleaguered retailer. However, this deal ultimately fell through, casting a shadow of uncertainty over Big Lots' future. The collapse of the Nexus Capital deal left Big Lots in a precarious position, with liquidation seeming like an increasingly likely outcome. The retail landscape was littered with the remnants of once mighty chains that had succumbed to similar financial woes, and Big Lots seemed destined to join their ranks. The weight of the situation was felt most acutely by Big Lots' dedicated workforce, who faced the prospect of losing their livelihoods. The company employed approximately 27,000 people across its stores and distribution centers, and the ripple effects of a complete shutdown would have been significant. As the news of the failed Nexus Capital deal spread, a sense of anxiety and apprehension settled over Big Lots employees, who were left wondering what the future held for them and their families. The collapse of the initial rescue attempt served as a stark reminder of the challenges facing the retail sector. The rise of e-commerce, coupled with changing consumer spending habits, had created a fiercely competitive environment that proved too difficult for some traditional retailers to navigate. Big Lots' struggles were emblematic of the broader trends reshaping the industry, and its fate hung precariously in the balance. Just when all hope seemed lost, a lifeline emerged from an unexpected source. Gordon Brothers Retail Partners, a firm specializing in restructuring and liquidating distressed retailers, stepped in to oversee Big Lots' going-out-of-business sales. However, Gordon Brothers had a different vision for Big Lots, one that didn't involve complete liquidation. Instead, they planned to leverage their expertise and network to find buyers for Big Lots' assets, including its stores, distribution centers, and intellectual property. This strategy led them to Variety Wholesalers, a rapidly growing discount retailer with a strong presence in the southeastern United States. Variety Wholesalers recognized the value of the Big Lots brand and saw an opportunity to expand its footprint by acquiring a significant portion of Big Lots' operations. The deal, announced in late December 2024, came as a welcome surprise to many who had feared the worst for Big Lots. Under the terms of the agreement, Variety Wholesalers would acquire between 200 and 400 Big Lots stores, along with 2 distribution centers. The deal also included the rights to the Big Lots brand, ensuring that the name would continue to resonate with shoppers. This development marked a significant turning point in Big Lots' fortunes, offering a glimmer of hope for the company's future. The news of the deal was met with a mix of relief and cautious optimism. While the agreement with Gordon Brothers and Variety Wholesalers didn't guarantee Big Lots' long-term survival, it provided a much-needed lifeline and a chance for the company to restructure and chart a new course. The deal was a testament to the enduring appeal of the Big Lots brand and the value of its loyal customer base. Perhaps the most significant aspect of the deal was its potential to save thousands of jobs. Variety Wholesalers pledged to retain existing employees at the acquired stores, offering a much-needed sense of security to those who had feared for their livelihoods. In addition to preserving existing jobs, the deal was also expected to create new employment opportunities as Variety Wholesalers integrated the acquired stores and distribution centers into its operations. The decision to retain the Big Lots brand was a strategic move by Variety Wholesalers. Big Lots had built strong brand recognition over its decades in business, and its name carried significant weight with consumers, particularly in the discount retail space. By preserving the brand, Variety Wholesalers could capitalize on this existing equity and seamlessly integrate the acquired stores into its portfolio. The saved jobs represented a victory not just for the affected employees and their families, but also for the communities where Big Lots stores were located. The closure of a major retailer can have a devastating impact on local economies, leading to job losses, reduced tax revenues, and a decline in property values. By keeping these stores open, Variety Wholesalers helped to preserve the economic vitality of these communities and provide a sense of stability during uncertain times. The deal was a powerful reminder of the human impact of corporate decisions. Behind the balance sheets and financial statements were real people whose lives were deeply affected by the fate of Big Lots. The commitment to saving jobs and preserving the brand demonstrated a sense of corporate responsibility and a recognition of the importance of supporting employees and communities. While the deal offered a glimmer of hope, Big Lots' future remained uncertain. The retail landscape was evolving rapidly, and the company faced stiff competition from both online and brick-and-mortar rivals. To thrive in this environment, Big Lots would need to adapt to changing consumer preferences, optimize its operations, and find innovative ways to differentiate itself from the competition. The company's financial struggles highlighted the importance of responsible business practices and prudent debt management. From an Islamic economic perspective, this situation underscores the significance of risk-sharing, ethical conduct, and a focus on long-term sustainability rather than short-term gains. Islamic finance principles emphasize the importance of investing in real assets, promoting social justice, and avoiding excessive debt, concepts that could have provided valuable guidance for Big Lots. The emphasis on risk-sharing in Islamic finance, for example, could have encouraged Big Lots to explore alternative financing models that aligned the interests of investors and the company more closely. Similarly, the focus on ethical conduct in Islamic finance could have fostered a corporate culture that prioritized transparency, fairness, and accountability, potentially mitigating some of the challenges that contributed to Big Lots' downfall. The Big Lots saga served as a cautionary tale about the importance of responsible business practices, prudent debt management, and the need for adaptability in the face of a rapidly changing retail landscape. As the company embarked on this new chapter, it had an opportunity to draw on valuable lessons from its past and embrace principles of Islamic finance to chart a more sustainable and ethical path forward.